Hi and welcome to your FX analysis for the week 11th of March 2019. We're going to look at the dollar index first, then break down all the FX majors, highlighting what we're seeing chart formation wise and our bespoke support and resistance levels this week. A word of caution, we believe that the dollar index is going to turn. Where it turns is obviously the most important factor, but intraday signals are extremely weak this week, and we're looking for a catalyst really for this turnaround in the dollar index. Now we've got inflation figures on Tuesday, the CPI Consumer Price Index. We've also got the Brexit vote on Tuesday. Apart from that, the calendar's looking pretty light, so we're sort of scratching our heads a little bit of what could be the turnaround, but the dollar index is definitely the product, if you like, to watch this week. So let's break down the time frames. First time frame we're going to look at is the weekly chart. Sorry, the daily chart. And this is basically why we think we're going to get a turnaround in the dollar. So we've got this expanding wedge formation, this trend of higher highs. It's currently located around about 98.16. Now an expanding wedge has a bias to break to the downside, normally quite impulsively as well. The measured move target, or the first support level, will be around about here at 95, the figure. If we go to the weekly chart, and let's remember this number, 98.16. If we go to the weekly chart, pretty similar to euro dollar actually, is the fact that we're getting very close to this 61.8% pullback level, which is at 97.86. And then of course we've got that trend of higher highs just above there. So we're looking for this rally to be limited. If we get a spike up and a rejection, it could be seen as a disjointed head and shoulders pattern. So this would be the head, left shoulder, and then the right shoulder over here. So let's just draw a, should we say, a temporary trend, or even a wedge formation. So we're looking for rallies to be limited, but the intraday bias is still really to buy on dollar dips until we get that turnaround, or if we get that turnaround in the dollar. So let's look at euro dollar. I think the most important chart this week is probably here. We've reached the 61.8% Fibonacci pullback level. Is that a 5-wave count? It's very disjointed. I think this factor, is far more important. So we've moved down, we've stalled at that 61.8% Fibonacci. Now if we go to the daily chart, there's no real clear indication that this downward move's has come to an end. In fact, on Thursday we had a strong sell-off in the euro, and then on Friday we just posted a mild inside a Rami candle. So really dip buying and selling into rallies intraday, dip buying over the medium term, I think, is the call in euro dollar. Today we've got resistance. Let's just have a look. Today we've got resistance at 113, the figure. We've got support at 111.60, and then all the way down to sort of 110.90 ish. Sterling dollar, the medium term focus is still bullish. So we've had this bullish outside month. Sorry, let's get onto this chart. We've had a P9, what they call a perfected 9 D mark, which normally indicates that you see at least a correction to the upside. We've had a bullish outside month. For this month to break, 1, 2, 3, 4, we need to see a move below the close of this candle this month, which is at 127.48, currently trading 129.82. So the medium term bias is still to the upside. However, it's now looking like the short term bias is just lower. We're breaking this wedge formation. We're stalling close to this previous high, but we've got some bespoke resistance up here at 131.05. So I'm wondering whether or not we're going to get a sort of choppy mix volatile trading, probably until Tuesday really. So a move back up towards this resistance level. This is also our bespoke resistance and a previous swing high, and then a move down possibly excuse me, for the wedge target, and then maybe a move to the upside. But do remember, if we do get some dramatic moves on Tuesday, this this support level here at 127.48, it'd have to see a monthly close below there to break this cycle or this medium-term bias. Looks like a large ending wedge formation which has an eventual bias to get up here, which would be nice if you're going to America for your holidays. Dollar Swiss again, it's sort of highlighting limited buying in the dollar, but intraday it's really, we've still got higher highs, higher lows, so we should still be buying on dips. 10036 is support, 10171 is trendline resistance. Expect trading to be pretty mixed and volatile until we get up towards that that level or possible level. We broke this head and shoulders formation to the upside. We've got an aggressive move higher, and it's reached the head and shoulders target level. This could now be seen in 5 waves, 1, 2, 3, 4, 5. So real caution in dollar Swiss, might be sort of topping out already. Dollar yen, a reverse idea, if you like, for the dollar. I think we still buy dollars in dollar yen. 1, 2, 3, we've stalled close to the 161.8% extension level. We've got some trendline support at 110.80. We've got bespoke support at 110.65. I think this is just coming lower in a 4th wave before we take another leg to the upside. Dollar CAD. We had this head and shoulders breakout. The measured move target is actually 135.82. Again, got to keep in the back of our minds that dollar bias, it's going to be limited, or we believe it's going to be limited. So really at the moment we're buying in dips, but with real caution for a possible end in that dollar rally. 133.35 is current support, and then we've got 133.05, which is reverse trendline support. So really support is all the way down here, and target levels are already all the way up here, so it's sort of giving us quite a wide scope really going into this week. Aussie dollar, still looking for this ABCD formation target, 61.8%, located at 69.55. To the upside, today we've got resistance around about 70, 75, 70, 80. And again, medium-term support, intraday resistance, so expecting some pretty mixed and volatile trading. Quite interesting how strong a recovery we saw in euro sterling towards the end of last week. We did post an insider army candle. We've seen a little gap open this morning. These windows normally get closed. Bespoke resistance is excuse me, is not seen until 87.43. We're still looking for this large ABCD formation to play out, with a target level around about 84.10. Euro yen broke a large wedge formation to the downside. This move higher was a retest to the breakout level. Seen an impulse move lower. No real clear indication that the sell-off has come to an end. Resistance is seen at 125.64. Support is seen at 124.20, 124.05. The medium-term bias is mixed in euro yen, and we're really looking sort of playing this range at least at the beginning of this week. Okay, I hope you found that educational, and we look forward to speaking to you again soon. Many thanks.